What's going on, guys? Welcome back to the channel and welcome back to your morning watch list. What we're going to do here is run through a couple different stocks, and then of course we're going to look at some of the bigger names like the S&P 500, QQQ, because if you haven't noticed, the market is still going down. This is something we did anticipate could happen pretty much since 2 weeks ago. So what I want to do is just run you through pretty much the same analysis we've been doing for the past 2 weeks, because not too much has actually changed. The only thing that's really changed is the desired price target. So let's go ahead and start running through this for you guys. What we're looking at here is the SPY. This is a very common ETF that we're going to take a look at every single day before we kind of get the morning going. What we've been paying most attention to start was this level that we just got. And if you guys remember, I've been telling you we should pretty much just target like 328 to 318, 320 on the S&P 500. Well, since the weekend has concluded, we have come down to our first price target of 325.36. This is a very, very important level that we just reached. If in the event today the market is successfully going through this level here at 325.50, 325.40, you can be sure that it's probably going to see some intense selling that could even bring us down to as low as 319 to 320. See, if you look at the chart that we have displayed right now, where my cursor is at is defining this white line right in the middle. And that white line in the middle, you can pretty much just think of as the statistical average for the trading trend currently. So again, if the average is in the middle and then well below the white line on the downside is oversold and well above the white line on the upside is overbought, and again that white line in the middle is the statistical average, then there's really nothing that is too scary essentially about this drop. The only thing that we've really done in the market so far is just return back to the statistical trending average. So again, if we look here at 319, that's a price where I think it's very possible you can see this market reach. If we look at the intraday trend allows for a move down to 319 before we were to get oversold on the intraday market. So to me, I think it's pretty clear that our markets are probably going to go down on the S&P 500 to about 320, more towards that longer term trending support. Okay? If that happens, what do you think is going to happen to most of your bigger name stocks? See, if we go take a look at something like Apple. Okay, Apple gapped down this morning and selling off. What is significant about this line here? Remember, I told you guys this was our first target on the downside for for Apple, and we wouldn't even really consider buying Apple until it came down to 106. Well, if we look at this 4-hour chart, oh, excuse me, I think it's a daily chart. Yeah, if you look at the daily chart, you can see that I think it was, Friday, we came down to 106. And you can see the daily chart, that on that day, we came down to 106 and we started to bounce slightly, all right, right there. You see how that line's right there? We came down to 106 and then we bounced. Well, the markets still weren't ready to hold and we ended up snapping through that support and trending lower. If we go to the 4-hour chart, the 4-hour chart has a slight support system coming into play here at about 101.91. Now, I can wholeheartedly tell you if the whole entire market continues to sell down, it's very unlikely you're going to see Apple holding any sort of support here at 102. So the way I see it is if the markets do in fact trend down on the S&P 500 to that 320 mark, okay, and before we go further on Apple, we need to take a look at the NASDAQ, QQQ. Okay, see if you look at QQQ already gave in its daily chart trend a while ago. So as we were discussing just previously, we were touching on the fact the S&P 500 still had room down to its statistical daily trend, okay? Whereas if you look at the NASDAQ had already broken the statistical daily trend. So now the NASDAQ is actually going into slightly oversold within the immediate, okay? So for me, we go back to the 4-hour chart. The 4-hour chart has a slight support system that we're basically on today. And again, I just don't think that's going to hold. So we'll see what ends up happening, but I can tell you that the markets have sold off quite a bit. The S&P 500 still has a little bit of room down to go to, like, say 320, and then Apple, as I was mentioning about that slight support we're on, if the Nasdaq does not hold here at 250, if it does not hold here at 260.58, you can pretty much just bet that Apple will most likely continue selling down through that same price. You can almost think of the NASDAQ and Apple exactly the same. Okay, let's do that. Let's go out of this chart and we're going to go into this one. Okay, give me a second. It's going to be good once I get there. All right, then we're going to unlink these because we don't need them both linked. And now we're going to go back over to QQQ. And you'll see that these charts are pretty identical, okay? So if we look at them, all right, so we had the top on Apple, it crashed, then we did this little consolidation, then we dropped out again. So we had the top, we crashed, we did the consolidation, and then we dropped out again. If we look at the 4-hour time frame, these charts are both on 4-hour time frames, mind you, okay? Look at the chart on the left, all right? You see that little dotted line down there where we said if, Apple could maybe hold a support there, okay? Go look at the chart on the right. What do we have? The NASDAQ with that what? That little dotted line there, like, it might hold support there. Probably not. So again, pretty much you have Apple and QQQ trading exactly the same. But why would that be happening? Well, if you think about it, Apple, not anymore, but they did have like a 2 trillion market cap or whatever. Let's just call them the biggest market cap stock, right? 2 trillion. Well, if Apple is one of the biggest market cap stocks and it's selling off, then it's probably going to look like that of the QQQ, which is, again, the NASDAQ, because, again, Apple is involved in the NASDAQ, right? So if Apple is the biggest stock there is with the biggest market cap, and that's the one selling off, say the most, then of course it would make sense that QQQ looks very similar to that, right? The apple does not fall too far from the tree is that concept there. So you can see that the charts are almost identical, all right? So we know that if the NASDAQ can support here and Apple ends up supporting here, then we'll probably get a bounce, right? And if the NASDAQ can't support here at 260 and we crack that white dotted line, then Apple's probably going to crack that white dotted line, right? And if that happens, then we pretty much just anticipate that the NASDAQ is going to go all the way down to here at 252. That will be the next level we would just anticipate markets go down to, is about 252 here on the NASDAQ. And if that happens, then you can probably just anticipate that Apple is going to go down here to 97.39. And if you look left now look left, not like reading a book. You're not going to go right. You're going to look back, right? So if we look back and we go left and look here at Apple, you're going to see what? Oh, coinkadink. There is a gap fill here in the market. See that big gap in the chart? Stocks like to fill their gaps, okay? So it's just ironic that we say, well, if NASDAQ does this and it goes down to the 254 price, then we're probably going to have maybe another bounce spot here, which then would probably bring Apple down to here. And then we look left and go, there's also a gap fill there. So if in the event everything I just said happens, you're going to see Apple probably go down to about $97.39, 80 cents, $98, which would primarily cause a gap fill on Apple here. All right. So for me, I actually kind of think it might be more logical of us now just to anticipate, after seeing the trading activity here and through all these trends, to pretty much anticipate we're going to see Apple down here at the call it the $98 price. I think it's very possible. So you guys know, for those of you that tune in this morning, watch us every single morning that we post these, we've pretty much been 100% spot on in anticipating where the markets would go with Apple, with Tesla, with the S&P 500. So, pat on the back, Connor, after, 6-7 years of doing this day in and day out, you're getting to a point where you have the confidence to pretty much just say to yourself, that's what's going to happen. And if it doesn't happen, who cares? But we're getting pretty good at that. So I got to pat myself on the back. It's been a long journey. So yeah, I'm pretty much just going to say it, with the way the market's been shaping up, I don't see there's any reason why we can't see Apple down to that $97 price. And when it happens, you can bet your butt I'll be looking to get long on the bottom of this Apple move for a reversal long trade. So I don't think it's there yet. So I think we still got to be a little patient, keep watching for the time being. But other than that, ladies and gentlemen, I figure that's good for now. That's going to be your morning wrap up. Now, I know we didn't go over too many other stocks, but just know that if you're a large cap trader, pretty much any of the stocks you're watching, there's a good chance that they're going to be following direction of the overall market, okay? So there's your morning wrap up. I think we're going to have some lower lows here coming in the SPY, coming even in the NASDAQ. And so we'll see how things unfold. Thank you guys for tuning in. I do appreciate it. Hit thumbs up on the button, and I'll see you guys in the next video. Everybody, take care.